Welcome to the deep dive. We're going to take a deep dive today into the global turbines market. We've got this new report, and it's fascinating. It really shines a light on this massive industry. We're talking about a market worth an estimated 45.6 billion USD in 2025.
Wow, 45.6 billion. That figure really hits home. It shows how essential turbine technology is. We're talking energy, we're talking transportation. So many sectors rely on it. And the exciting part, the projections for growth are just incredible.
Right. It's expected to hit 66.35 billion USD by 2033.
That's a big jump.
Huge. It's a compound annual growth rate of 4.80% from 2025. And you know what's fueling this growth? Increasing demand for renewable energy. Everyone's looking for more efficient ways to generate power, and turbines are key to that.
Exactly. As the world shifts towards cleaner energy, turbine technology is becoming even more vital. It's at the heart of this entire energy transition.
So we're going to break down this market. First, we'll look at the global picture. Then we'll zoom in on specific regions: North America, Europe, Asia Pacific. We'll cover Latin America, Middle East, and Africa too. We'll also dive into the different types of turbines, how they work, their applications, and how they're being sold.
It's a multi-layered approach, but it's going to give you a really clear understanding of the current market and where it's headed. We'll be pulling directly from the report, focusing on those key numbers and the trends that are shaping this industry.
Perfect. So big picture first. Globally, the turbines market is valued at 45.6 billion USD in 2025. With that 4.80% CAGR, it's projected to reach 66.35 billion USD by 2033.
And that growth is spread out over almost a decade. That suggests a really significant shift in how we're thinking about energy and industrial processes on a global scale.
It really does. Now, let's zoom in on North America. They're the big player right now, holding over 40% of the global revenue. In 2025, their market is estimated at 18.24 billion USD. But their growth is a bit slower compared to other regions, a CAGR of 3.0% between 2025 and 2033.
Well, it makes sense. North America has a long history with turbine technology. They adopted it early across various sectors. Maybe this slower growth suggests that their market is already pretty mature. They might be focusing more on upgrading existing infrastructure rather than, say, rapidly building out new projects like we might see in developing regions.
That's a good point. Within North America, the United States is dominant. 14.39 billion USD market in 2025 with a CAGR of 2.8%. The report highlights their focus on new technology and the push for sustainable energy as the main drivers.
Right. The U.S. has invested heavily in renewable energy, especially wind power. That's all about turbines. Plus, they're putting a lot of effort into modernizing their power grid and improving energy efficiency. It all adds up.
Absolutely. And then we have Canada, a market of 2.19 billion USD in 2025, slightly higher CAGR at 3.8%. Seems like similar factors are driving their market too. And Mexico rounded out with a 1.66 billion USD market in 2025 and a 3.5% growth rate.
It's interesting. While the U.S. is the biggest player, Canada and Mexico are showing faster growth. It makes you wonder if they're seeing faster adoption in certain sectors.
That's something to think about. The report also mentions that industrial machinery is a major factor driving demand in North America. Makes sense when you consider all the manufacturing and resource extraction happening there.
Definitely. Turbines are essential for so much industrial equipment. Pumps, compressors, generators, they're not just about powering homes, they're powering entire industries.
Okay, let's hop over to Europe. They make up over 30% of the global market, 13.68 billion USD in 2025, with a projected CAGR of 3.3%. What stands out here is their commitment to sustainability. Lots of green energy initiatives, especially in wind power.
Europe is leading the way with ambitious climate goals. They're really pushing for renewable energy, and that means more demand for wind turbines, both onshore and offshore.
Exactly. Within Europe, the UK's market is 2.30 billion USD in 2025. Their on-CR is a strong 4.1%, a clear sign that those green energy policies are having an impact. And then there's Germany, a major industrial player, 2.71 billion USD market, 3.5% CAGR. They've been focused on sustainability for a long time.
The UK's growth rate is impressive. It might be because they've sped up their adoption of renewable energy recently compared to some of the more established markets in Europe.
Yeah.
And Germany, while their market size and consistent growth just highlight their commitment to this energy transition.
Right. We also see Russia with a 2.12 billion USD market and a KGR of 2.3%. Italy is at 1.18 billion, 2.7% growth. Spain, 1.1 billion, 2.4%. And then there's smaller markets like Luxembourg at 0.42 billion, 3.4% CAGR. Portugal at 0.29 billion, 3.1% growth. And Greece showing a good 3.6% growth with a 0.16 billion market, The rest of Europe combined represents 2.12 billion USD, with a slower growth rate of 2.0% CAGR.
It's interesting how the growth rates vary across Europe. It probably reflects differences in their energy policies, the resources they have available, and how mature the renewable energy sectors are. Even the smaller countries are contributing to the overall market growth.
Now, let's head over to Asia Pacific. This region is about 23% of the global market, with a value of 10.49 billion USD in 2025. But their projected CAGR is a whopping 6.8%. A lot's happening there. Rapid industrialization, urbanization, and a big push for renewable energy, especially wind and hydro.
Asia Pacific is a major driver in this market. Their industrial development is happening so fast, and their cities are growing rapidly. That creates huge energy demands. Plus, they're trying to combat pollution and meet sustainability goals, so cleaner energy sources are crucial.
Absolutely. China is leading the charge. 4.4 billion USD market in 2025, a CAGR of 6.3%. Their focus on industrialization and renewable energy is driving a real surge in turbine demand. India is another major player. 1.26 billion USD market in 2025, and a remarkable CAGR of 8.6%. Similar factors at play there.
When you consider their huge populations and how fast their economies are growing, the growth in China and India is significant. And they're setting ambitious targets for renewable energy, which creates major opportunities for turbine manufacturers.
No doubt. Japan's market is at 1.45 billion with a CAGR of 5.3%. South Korea is at 1.05 billion with 5.9% growth. Australia, 0.55 billion and a strong 6.5% CAGR. Southeast Asia combined is 0.72 billion with an impressive 7.8% CAGR. Taiwan's at 0.34 billion with 6.1%, and the rest of Asia Pacific adds up to 0.72 billion with a 6.6% growth rate.
All those high growth rates across Asia Pacific, even in the smaller markets, show how dynamic this region is. Both the industrial and renewable energy sectors are really pushing things forward.
Now on to Latin America. This region holds over 5% of the global market, valued at 2.28 billion USD in 2025 with a KGR of 4.2%. The report emphasizes their growing focus on diversifying energy sources, investing in infrastructure, and adopting wind and hydropower.
Latin America has so much potential for renewable energy, especially with all their wind and hydro resources. As they invest in modernizing their energy infrastructure, turbines will become even more important.
Brazil is the biggest market in Latin America. It's at 0.98 billion USD in 2025 with a KGR of 4.8%. Their push for energy diversification is a key factor there. Argentina follows with 0.38 billion and a strong 5.1% CAGR. Then we have Colombia at 0.20 billion, 4.0% growth. Peru at 0.19 billion, 4.4%. Chile at 0.16 billion with 4.5%. And the rest of Latin America combined is 0.37 billion with a 3.3% CAGR.
It looks like Argentina, Peru, and Chile are adopting newer energy technologies faster than Brazil, even though Brazil's overall market is still significant.
Interesting. Finally, there's the Middle East and Africa. This region is about 2% of the global market, valued at 0.91 billion USD in 2025, with a CAGR of 4.5%. Urbanization, infrastructure projects, and improving building efficiency are the main drivers, with industrial applications playing a key role.
Their market share might be smaller compared to other regions, but their growth rate is still impressive. They're developing modern infrastructure and dealing with the energy demands of growing cities.
For sure. The GCC countries are at 0.39 billion USD in 2025, with a strong CAGR of 5.3%, driven by urbanization and infrastructure. South Africa is at 0.14 billion, even higher, CAGR at 5.5%. Egypt, 0.10 billion, 4.8% growth. Turkey, 0.08 billion, 4.0%. Nigeria, 0.10 billion, 3.6%. And the rest of the Middle East and Africa combined, 0.11 billion, with a TGR of 3.5%.
Wow! The GCC countries and South Africa are seeing rapid growth. Their focus on industrialization and building new infrastructure is really driving demand.
All right, we've seen the global market and how it looks regionally. Now let's look at the different types of turbines. The report breaks down the market by category: roller turbines and ball turbines. Roller turbines are dominant right now. The report says it's because they're widely used in energy and aerospace. They're known for their durability, efficiency, and ability to handle high speeds. They're a popular choice for both renewable and conventional energy systems.
Makes sense. Roller turbines have been around for a while. The technology is well established, especially for large-scale power generation. People trust them because they're reliable and they perform well.
But things might be changing. The report highlights ball turbines as the fastest growing segment, especially in renewable energy. They're getting attention because they might be more fuel efficient and have lower maintenance costs. Plus, their smaller size makes them a good fit for smaller scale and off-grid power generation.
It's interesting. It makes you wonder if this growth in ball turbines means we're moving toward more distributed and efficient energy solutions. As we use more renewable energy in more places, maybe the advantages of ball turbines will become even more valuable. Do you think advancements in materials or design are making ball turbines more adaptable to different applications now?
That's a great question. It's definitely something to watch as this technology develops. The next way the report breaks things down is by slew type. That's the mechanism that lets the turbine rotate. There are standard slew turbines and precision slew turbines. Standard slew turbines are most common now. That's because they're used in lots of industrial applications like power generation, oil and gas, and manufacturing. They're reliable for both constant and changing speeds. Plus, they're cost-effective because their design is relatively simple.
They're the real workhorses of many industries, providing that rotational power for all sorts of demanding tasks.
Definitely. But the area growing fastest is precision slow turbines. They're in demand because industries like aerospace, medical devices, and advanced energy need very precise, controlled movements. This growth is driven by trends like digitalization and automation.
It makes sense. As technology advances, we need more and more precision in manufacturing, in energy, in everything. And turbines need to keep up.
Absolutely. Now let's look at the type outlook. The report separates turbines into two types: catalog standard turbines and customized solutions. Catalog standard turbines are the most common. That's probably because they have widely accepted designs and a proven track record. They're cost-effective and readily available, making them a popular choice for large-scale power generation, especially in thermal and hydroelectric plants. Easy installation and quick delivery are also big advantages.
Those catalog standard turbines are appealing because they're reliable, cost-effective thanks to mass production, and they have well-established supply chains. It makes sense that they're the go-to choice for big infrastructure projects.
However, customized turbine solutions are the fastest-growing segment. It shows how much demand there is for turbines that are tailored to very specific needs. This is especially true in renewable energy, aerospace, and specialized industries. It makes you wonder if this trend towards customization is a challenge for the big players in the market who are used to mass-producing standard models.
Yeah, that's a really interesting point. The big manufacturers might need to adapt and become more flexible to keep up with the demand for customized solutions. This could be an opportunity for smaller companies that are already good at providing those specialized solutions.
Now, the report also looks at slewing ring size. The most common size is between 400 millimeters and 1,000 millimeters in diameter. That size range is versatile, working well for wind turbines, construction equipment, and power generation. They provide a good balance of power, size, and manageability. Plus, their manufacturing is well established, making them cost-efficient.
That mid-range size really does seem like the sweet spot for a wide variety of applications.
But the fastest growth is in the larger slewing rings, those with a diameter greater than 1,000 millimeters. This is driven by the increasing demand for larger, more powerful turbines, particularly in the renewable energy sector. Think massive offshore wind farms and large hydro plants. Those big rings are essential for handling those heavy loads and making sure the rotation is precise.
And the trend towards larger turbines just keeps going, especially as we install larger and more powerful renewable energy systems.
Now for the application outlook. Renewable energy is the dominant segment, which makes sense given the global push for sustainability. Wind power, hydropower, even concentrated solar thermal, they all rely heavily on turbines. Government incentives and ongoing technology improvements are driving this dominance. It's remarkable to see this shift happening in real time as we try to change how we power the world.
The fact that renewable energy applications are dominant in the turbine market really shows the global commitment to reducing carbon emissions. Turbine technology is key to making clean energy work.
Absolutely. The fastest growing segment, though, is aerospace and defense. This is driven by advancements in technology and the need for more efficient aircraft engines. Turbines for both commercial and military aircraft need cutting-edge designs to perform at their best. The combination of increasing defense spending and the desire for better fuel efficiency is a major factor in this growth. And of course, there are other applications: industrial machinery, construction, mining, medical systems, robotics, and machine tools.
Aerospace and defense are always pushing the boundaries of what's possible. They need the best performance, the highest efficiency, and their demands often lead to breakthroughs in turbine design and materials. It's a fascinating area.
The last thing the report covers is distribution channels for turbines.
Yeah.
Currently, direct sales is the dominant channel. especially for those large, expensive systems used in power generation and heavy industry. Manufacturers often prefer to sell directly so they can maintain close relationships with their customers, offer customized solutions, and provide after-sales support. It gives them more control over pricing and their brand image.
When you're talking about complex, expensive equipment like turbines, it makes sense for the manufacturer to work directly with the end user. That way, they can make sure the equipment is specified correctly, installed properly, and supported throughout its lifespan.
But the report says that indirect sales are the fastest growing channel. This is likely due to the growing demand in regions where local distributors have established networks and know the market well. This indirect approach allows manufacturers to tap into local expertise, existing logistics, and relationships, which can really speed up their entry into new markets.
As the global market grows, especially in new and geographically diverse regions, using those local distributors becomes a really important strategy for manufacturers who want to reach new customers.
So we've covered a lot: market size, projected growth, regional breakdowns, types of turbines, all sorts of things. Now let's look at the overall drivers, restraints, and trends highlighted in the report. Not surprisingly, the biggest driver is the increasing global demand for energy. This drives the adoption of turbine technology across almost every industry. Then there's the global shift towards renewable energy, which is a major driver for wind and hydro turbines. And we can't forget the continuous advancements in turbine technology itself, leading to improvements in efficiency, reliability, and performance.
It's all connected. We need more energy, we need cleaner energy, and we need better technology to make it all happen. These are the big forces driving the turbine market.
But there are also things holding back growth. The high initial investment and the costs of maintaining turbines can be a barrier, especially for smaller companies or in developing economies. And increasingly strict environmental regulations can limit where and how new turbines can be installed.
It's true. We need to find solutions to these economic and regulatory challenges if we want to see even faster adoption of turbine technology, especially when it comes to renewable energy and meeting global sustainability goals.
Looking ahead, the report points to two major trends. The first is the growing use of smart and digitalized turbines. These systems have sensors and data analytics that allow for real-time monitoring, predictive maintenance, and optimization. And the second trend is the increasing focus on developing and deploying sustainable and hybrid turbine technologies. The goal here is to reduce environmental impact and maximize energy efficiency.
It seems like turbines are becoming more than just machines. They're becoming intelligent systems within a larger energy network, helping to make everything more efficient, reliable, and sustainable.
Now let's touch on the competitive landscape. The report says it's a very competitive market with a mix of large multinational corporations and smaller regional manufacturers. They're all working on different types of turbines: steam, gas, wind, hydro. Some of the big names mentioned in the report are General Electric, Siemens Energy, Mitsubishi Power, Vestas Wind Systems, Siemens Gamesa Renewable Energy, Kawasaki Heavy Industries, Capstone Green Energy Corporation, and Saldo Energia, Nordex SE, Suzlon Energy Limited, and Lido Storage Power Group.
So we've got these global giants and these more specialized regional companies. It sounds like a dynamic market where you have to innovate and adapt to survive. Is it mostly dominated by a few big players, or are there lots of smaller companies with decent market share?
The report suggests that the big players have a large share because they offer a wide range of products and operate globally. But there are also successful smaller companies that focus on specific types of turbines or specific regions. It seems like there's healthy competition across the board. The report even gives a couple of examples of recent activity. In August 2023, the Suzlon Group got a contract to supply 64 wind turbine generators with a total capacity of 201.6 megawatts to Tech Green Power Xepa. These turbines will use a hybrid lattice tubular tower design and each have a rated capacity of 3.15 megawatts.
That's a big deal. It shows how much investment is still going into wind energy. And those technical details about the tower design and capacity highlight how turbine technology keeps improving.
And there's another example from July 2021. Farad Heavy Electricals Limited, or BHEL, got a contract to supply 12 steam generators for 700 megawatt pressurized heavy water reactors at 4 different nuclear power plants in India.
So turbines are still crucial for conventional power generation, even in nuclear energy. It shows the scale and complexity of these big energy projects.
So to sum up, this deep dive into the global turbines market paints a picture of growth and change. It's driven by the need for renewable energy and the desire for more efficient power solutions. North America is the leader now, but Asia Pacific is growing the fastest. And the different segments of the market, from turbine design to distribution, are all evolving. It shows how diverse the needs of industries are and how technology keeps moving forward.
It's been a fascinating deep dive. Understanding these market dynamics, the regional differences, and how the market is segmented is really valuable. It's a complex but essential industry. It's the foundation of so much of our infrastructure, and it will be essential for shaping our energy future.
If you're someone who wants to learn quickly and thoroughly, this deep dive should have given you a good overview of this important market. We cover the key trends and regional differences without getting lost in the details.
It makes you think. We're seeing so much investment in renewable energy, and the market is projected to grow so much. So, what could happen in the future? What radical new turbine technologies might be developed that will make energy even more efficient? Could they lead to entirely new uses for turbines, uses we haven't even thought of yet? As technology keeps advancing, the possibilities seem endless.